The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 17th terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there is off to a terrific start of their morning. Let's make sure that we do all that we can do to have a terrific Thursday. Welcome to all our new listeners out there. My name again is Steve Rhodes, and we've got an interactive show here at TFNN.com. You can always give us a call at 877-927-6648. Hey, I understand that when you make a call into a radio show out there that your endorphins start to fly in here. Your heart starts to beat a little bit faster, a little bit nervous. The reason why I say that is because I call into talk shows every now and again, and even though I do this here, and it seems to come so natural, of course, day one when I did it, it was anything but natural out there. But even still, when I do that, I get that same jacked up feeling, or that each of you go through. But I'll make it as easy as I can. We'll take a look at your stock chart, and I'll do anything I can to try to maybe make you aware of something that you hadn't looked at. Maybe it'll be the opposite. You'll make me aware of something that I am not seeing out there. My goal here during the next hour, though, is to teach you how to master the tools for trading. That includes patterns such as the A to B equals CD pattern. It includes taking a look at swing points. And that is those are the measuring sticks that we use for where price is going to move above, move below. We use those. We take a look at Gartley buy and sell patterns. In fact, we'll go take a look at this morning's Gartley buy pattern that took place on a 30-minute chart inside of the ES Mini. We'll take a look at currency pairs and anything else you want. Of course, we always look at the Japanese candlesticks. Those are the signs that the bulls and bears make for you and I each and every day. If you've not had a chance to test drive my newsletter service, just go over to the homepage of TFNN.com. What you'll see is you'll see my name towards the center midsection area. Click on it, then click on Mastering Probability. You can test drive that service for the next 30 days. It is Terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show out here. We've got the Dow is up off $1. S&P is down $2. NASDAQ Composite off 6. Russell's off about 4. Russell, the leader to the downside out here, so we want to make sure that we're paying attention to the Russell 2000. VIX index this morning here is flat, off 3 pennies, so we won't worry about that. Let's start off by taking a look at what's going on. Now, when we took a look in the first hour, we know that the ES Mini is traveling with inside about a 40-point range out there. 1978 really is the top of that pattern. 1974 is a fairly significant resistance zone. We're traded 1973.50 on the futures contract. If we take a look at it, the ES Mini here on the 30-minute time frame, and it set up a nice 0.786 Gartley buy pattern here. It did that this morning, and it's made it to its third objective. Any Gartley pattern has got 5 different outcomes. Outcome number 1 is a 0.382 retracement. We can see that that level here was hit with a fairly nice wide-ranging bar at about 8:30 this morning. And as it sliced through that like Kerrygold butter with a nice warm knife, well, then as it took on its second outcome, which is your 0.618 retracement level, was doing it with what? Doing it with a wide-ranging bar that took us all the way up to the third level out there, that third level being in the 1974 range. You got up to 1974.25. 1974.50 is actually the 0.786 retracement level. Now, that, too, is a wide-ranging bar. What does that suggest? Well, it suggests that that may not be the move. The move may not be over to the upside with inside of the ES Mini. If it does reverse from here, it would be unusual. But, hey, anything can happen. The key level for us to be watching today is going to be the 1962 level inside the ES Mini. In fact, I think it's 1961. We'll change it to 1961 if we go back and take a look at the daily contract here for the S&P futures, just so I give you the proper market profile. Yeah, 1961 50 is the number to be keyed in on. That's what we saw as a low this morning. That's the market profile low for the ES Mini. That hit, that held, and that just continues to set up our little consolidation range out here. If we take a look at things that are moving and grooving in the market here this morning, we've got to the upside. The market's being led by Dresser Rand. DRC is the ticker symbol. Dresser Rand Group gapped up this morning. Big volume behind the move out here, but it is well off of its session. Well, it's not well off. It's well off its session intraday high out here. We'll take a look at that stock chart. Alliance Data Systems, ADS, is the ticker symbol. She's up about $8. That's up a little over 2.5%, 2.8%. Canadian Pacific Realty, CP, is the ticker symbol. That's trading out right now at 190.48. That's up 3.5%. Sherwin-Williams moving up this morning. A strong move, up $6 and change, up 3%. United Rentals up about a little over 5%, up 5.80. Looks like they were out with numbers. Generated revenues of $1.4 billion versus $1.2 from the prior year. Net income of $94 million versus $83. To the downside out here, and I mean really to the downside with volume, is SanDisk. SanDisk down $11. That's off 10% this morning. They too are out with numbers. Looks like their revenues were $1.63 billion. That was up 11% year over year, but they must be guiding lower out here. Well, I don't know what they must be doing. I can tell you that the sellers of the market of the stock, they're guiding lower with conviction. Also, we have Colfax Corp. CFX is a ticker symbol. That's down at $4. AutoNation AN is a ticker symbol, off 7%, down $4. Yum Brands, not too yummy this morning, down almost 5%, off about $3.80. We've got Wynn Resorts off $3. Shire PLC down 3. Mattel, the toy maker, MAT is the ticker symbol. Of course, this is not their season. Their season comes in about a few months or so. They did $1.06 billion in revenue for their second quarter versus $1.17, $1.17 billion the prior year out there. Looks like they've declared a 38-cent dividend for their Q3 out here. You got to be a record holder as of August 27, 2014 out there. Those are the things that are moving to the upside and moving to the downside. Let's go check in on a few of those out here. Let's go take a look at to the upside. Let's start with the numero uno. That's Dresser Rand Group out here. As we take a look at its stock chart, take a look at this gap up. Excuse me. Let me see. Was this a buyout or anything out here? Surge to no. New high on reports of Siemens. Okay, so there we go. So there's a report of Siemens trying to take them out. So let's not spend too much time on Dresser Rand Corp. Of course, if it did gap down tomorrow and that proved to be a rumor, that would be the death in the because it would create a huge island reversal top at all-time highs out there. That's not what you want to see inside a market. This, at its lows, it made an island reversal. By the way, this was down here on the trading session between February 18th to February 28th out there, and that created a nice little island. It had gapped up on the trading session of March 3rd. That cemented a pretty nice low out there. So it doesn't want to create bookends with island reversals out here. DRC is the ticker symbol. We've got Alliance Data Systems. ADS is the ticker symbol. They were out with numbers $1.27 billion versus $1.03 from the prior year. Consensus was at about $1.25. So moving up here this morning, trading out at about $280 and a change out here. It's taking on its swing point high. This is on a daily chart that we're looking at. That is from March 21st. That swing point high is up at the 300.49 level. The low of that swing, which it's testing this morning, is at 286.50. 2 million shares on that trading session. Today up with 331,000 shares. So with 45 minutes of trading, 1.8, 2 million shares. Yeah, it's actually got about similar type volume. So it's attacking that swing point with volume. If this closes today below 274.07. That would be a slight problem for it. But if it can close, if it can't close above 285.30, that would be nice and bullish. If it can close above 286.70, even better with volume because that's its most recent swing point. And then let's take this back a little bit further out here. If it can't close above that, if it goes in a test the high from the trading session of March 21st out here, what it's really setting up as a consolidation pattern. So that's kind of interesting. If you want to see what that consolidation, I'll just use some lines. We'll draw some horizontal lines across my chart. That's going to be the swing point high from the trading session of March 21st. We're not up there yet, so we don't know yet if it's a true consolidation pattern. And the bottom of the consolidation, that is very clearly marked. That's at the swing low from February 5th. That did volume of 1.06 million shares down there at a price of $230.53. Came down there with 1.3 million shares, so it's coming down with volume. That was on April 28th. It came back down there with 1.3 million shares on May 7th. Couldn't bust it down, and now what it's trying to do is bust it to the upside, $300.49. Now, that is a nice consolidation. That is a 70-point consolidation. So any close above 300.49, that says that this equity would want to make a run up into the 370 level as long as it does it with volume. That is ticker symbol ADS, ADS Alliance date out here. Let's go take a look at Canadian Pacific Realty. I believe it's RY. It probably is a realty out here. Might be a real estate investment trust. Railway. What am I talking about? RW. Of course, Canadian Pacific Railway. Okay, Stevie's got it. They did $1.68 billion in revenue versus $1.5 billion. I heard somebody was trying to come through that microphone, choking my neck, saying, "No, that's not realty. That's railway out there." Net income $371 million where's there? I don't see their prior quarter out there. In any event, let's go see what the equity is doing. Moving higher this morning, up above some resistance level. Let's look a little further back on its stock chart. So it's taken out a swing point. Its most recent swing point that I will use out here is June 13th, 1.4 million shares on that trading session up today with already 687. That's a huge A to B equals CD to the upside. That is a huge A to B equals CD to the upside. You want to see where that price projection comes in at your 1-to-1 A to B equals CD using the swing point low from April 11th as your A point, your B point being that swing we were looking at from June 13th, and really no retracement whatsoever, 20% retracement. So closing above 186 today, or 189.75. It's got the volume behind the move, says it would want to move up to about the 220 level out there. That is on ticker symbol CP, Canadian Pacific Railway out there, not to be confused with Realty. United Rentals, URI is a ticker symbol. I don't know if it's still on. Well, looks like it may still be on the IBD. I don't see any reason for it to not be on the IBD list out here. Today, it's gapped up into the 1 to 1.272 A to B equals CD pattern. That was projected at 113.50. You're trading at 113.76 right now. Gapping up with volume behind the move of 1 million shares, so that's pretty good out there. That says it's next level on the way up for United Rentals. Ought to take it into the 121.25 level, of course. This thing is, I believe, at all-time highs. It is, and you want to pay attention to equities like this because should there be any kind of reversal in the marketplace, when and if that ever does happen out there, if there is some kind of reversal inside the marketplace and this gaps down tomorrow, that creates an island reversal. I am not saying that's going to happen. I'm just saying it's something you ought to be paying attention to. URI is the ticker symbol. This is Steve Rhodes. This is TFNN. We've got the Dow off 3, S&P's down 2. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow slightly green out here, up $7. S&P is flat, off 56 pennies. Composite off $4. Russell down $1.80. Nasdaq 100, NDX 100 off about $3 out here. We've got a market that just won't give it up. That's for sure. In the face of even a sliding Euro-Japanese yen, as you know, this is my favorite currency pair because of how it tracks the U.S. Stock market out here. It broke through a level of support yesterday by closing below the June 12th swing point out there. Ordinarily, and I still say it's a dangerous thing unless this carry trade, unless this currency pair is now finally decoupled. And I just don't have the evidence to suggest that it is. We're seeing a rubber band getting stretched in a direction that typically does not end well out here. So this currency pair is now on the way down to test the bottom of its rising price channel. That's a rising price channel taking you back into the time frame of July 23rd of 2012, by the way. So a nice big price channel. Your 1-to-1 A to B equals CD to the downside. That takes you to 136.82. If the price channel here breaks, what we'll see is you move in this currency pair down to the price level of Well, what it will do is it'll make a 1.272 expansion. It needs to close below 136.22. So forget the 136.83. A close below 136.22, which will likely also pierce, it'll more than pierce the that little rising price channel. That'll send price down to about the 134 level. So we'll continue to watch this. If you want to see what the correlation looks like, as most of you know, I typically take a look at the ES Mini out there, the S&P future, the S&P, and I've used the Euro Yen as a tracker amongst that level. And I can put that up on my stock chart. I'll put that up on my screen here right now. And so we'll put that down. Let me just change. I haven't changed this here. Here's many of the instances just over the past where the Euro Yen is the direction that the market resolves itself in. So let me just go ahead and kind of update this out here. Well, that didn't do a very good job. All right, Steve. Well, that's a little bit better. Okay. If you come back, just as an example, the bottom portion of my chart, the Euro Japanese Yen, you come back in the time frame of June of 2013, it was making higher lows. The S&P was in the S&P futures. That's what we're looking at here, was making lower lows. The market resolved itself in the direction of the Euro Yen. You come back into the time period here between July of 2013 and August 2013. You had the S&P moving higher. You had the Euro Yen moving lower. Which way did the market resolve itself? In the direction of the currency pair. That takes you into a little bottom that formed back in August of 2013. What was the Euro Yen doing? It was making a higher low. Market resolved itself inside that direction. You can come back here into the time period of when the market was making a low back here in December of 2013, what was the Euro Yen doing? It was making higher lows. What did we have? We had the Santa Claus rally that took place on December 18th out there. It was the Euro Yen that was actually broadcasting what the market was eventually going to do. It can't be used as a timing tool, but boy, as a forecasting tool from a cautionary standpoint, it's important. The Euro Yen here, back in the early January time frame, it was making lower highs. The market was making higher highs. We saw that move lower inside the market. Not so bad inside the S&P into the February 5th area, but boy, it was a big move inside of the NQ out there. And the only time period where this thing really didn't work well, where the ES Mini was moving higher and making a higher low, and the Euro Yen was making a lower low, was back here in the March time frame, March 3rd. Otherwise, all of these have mattered in the past. And that's why one instance of it coming unglued doesn't tell me that the currency pair has become uncoupled. It is, like I said, I wish I could use it as a timing tool. I have at times out there. But I know that from the timing tool, you really just take a look at the patterns that are and the signals that are actually taking in place inside the indice, the ETF, whatever it is that you might be trading out there. So this is not a good scene out here. This says that, now, it doesn't, because you can't use it as a timing tool, what I also want to say is you can't use it as a tool to identify where is price likely going to gravitate to. There is no correlation of one pip equals X number of pennies or X number of dollars inside the S&P with regard to its correction. But I can tell you this has not ended well in the past out there. That's just one of the correlating charts that I like to use. I also like to, from a Dow perspective, with the Dow being the strong dog out here as we speak right now, the Dow has got a pattern that in the past has also mattered, and that's the pattern with regard to GE, the general out there, which is like number 27 from a weighting structure inside the Dow. This is making lower highs. The Dow is making higher highs in the past. That also has mattered out there. So two correlations that have got to make you say, something to think about. Right now, we got the Dow is up 9, S&P is flat. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. No real changes in the markets. Of course, before the break, the last two charts we were looking at, the Euro, Japanese yen. We showed that breaking down. We showed GE and its future message of the market. But our other liquidity gauge here that's taking precedent clearly is the VIX index. It is continuing to trade below the 50-day exponential moving average. That's after spending 2 days above it. That being the trading session from July the 10th as well as July 11th out there. Otherwise, it continues to act as a resistance area, and as long as the market trades below the 50-day exponential moving average of the VIX, the markets will either move sideways or move higher out there, and this one is having the larger impact. Let's go take a look at the currency pairs and the world markets. Let's go look at the DAX. Then we'll come back and take a look at the take a look at the currency pairs. If you take a look at the DAX here, the DAX had broken out of a little consolidation pattern that it had been traveling in. It broke out with a wide-ranging bar. That was a gap up, by the way. That was on May 27th. Now, price came back, and that's if you watch this on Tiger TV, you're looking at the little shaded-in yellow area. The top of the consolidation being about 97.90, 97.89. The low of the consolidation being around the 8,900 level. So you got 8,900 to 97. So you got a nice 800 point I'm sorry, 9,800. We'll call it 89. So you got a 900 point consolidation and potential consolidation here. Now, price broke above the consolidation, came back, tested it, rejected it back. That was back on June 26th. Came back and got inside the consolidation level on June 10th out here. Yesterday had a fairly nice session, broke out of it. And now the message of the DAX here is that it again wants to at least go revisit the highs, this little shooting star candle from June 20th. But if it can get up over that, which is 10,051, if it can get up over that, remember it has a nice large 900-point consolidation pattern that it is trying to break out of. Of course, probably the FTSE gives us the largest signal overall with regard to the markets. How about that? As well as the markets overseas. It has a 400-point consolidation, which it has not been able to break, but it does look like a little three drive to a bottom pattern that actually formed out here recently. Interesting. Let's go take a look at that. Let me first just do this and make it a little bit easier for you to see on Tiger TV. I'm just going to go ahead and turn that color off. So we've got that off. That will make it a little bit easier to take a look at the three drive, which I'm just noticing on my chart out here. Let's go see how good of a three drive pattern this is. What I'm looking at here is a low from June 17th. The second low that I'm looking at came in here on June 26th, and that third low coming in just a few days ago. There's your three drive to a bottom pattern inside of the FTSE. It looks like time-wise, let me go take a look at its cycle pattern. Looks like time-wise that it met. Yeah, time-wise was pretty much right on the spot. July 9th was the projected day. It actually hit that bottom on July 10th, so that works for me. No bullish reversal signal on its very next trading session out here, that being the FTSE that we're looking at. But with a three drive to a bottom pattern inside of the FTSE, a potential three drive to a bottom pattern inside the FTSE, that should be a very significant reversal area. And there's nothing more bullish than a failed three drive to a top pattern. We'll go take a look at that. That's inside the Dow. We don't have that here. And if this works, if this pattern here works, what you should see is you should see the FTSE take out its key reversal session from May 15th. So if you're looking at upside potential, we've got to take a look at the market from both sides of the trade. We absolutely need to do that. And, one of those bearish patterns is a euro-yen that's moving lower and the market just simply ignoring it. Let's look at the individual stock chart. The FTSE here, if it can get above 68.94.88, that's the swing point high from May 15th with this little three drive to a bottom pattern out here. That'll give you a very bullish message, a 400-point move to the upside inside of the FTSE. So we'll leave that pattern here drawn in. The Nikkei here has been also traveling in kind of a lower level consolidation pattern. It's up towards, this is where it broke down. It most recently broke down back on January 24th, little wide-ranging bar to the downside with this gap out here. You can see that when it traded today, it got up and it tested that area, was not able to break out. It is traveling, though, in a nice little rising price channel. Those are the black diagonal lines on my screen as well. So nothing bearish here necessarily about it, other than not being able to break above the high here from January 24th out there. Let's go look at what others do we have out here worth noting. Looks like not much. So let's go take a look at the currency pairs. Let's go see what's going on there. Let's start with the euro-US dollar. This is a weekly chart. Now, the euro-US dollar on the weekly chart is just now testing the break of its descending price channel. The euro-US dollar, this is the weekly chart. It takes us back into the 2008 time frame. The euro-US dollar was able to break through this, and that's a long time frame change in trend out here. It finally broke through it with some conviction. That was was back around in the February timeframe, the 21st, the 28th of February. Price broke out. It has tested trying to get back inside that descending price channel, saying that the break topside was false. It has been testing that for the week of June 6th, June 13th, and June 20th. Well, it's testing it one more time again here in the weekend of July 18th, tomorrow out here. If it does get back inside this descending price channel, that's pretty bearish for the euro-U.S. dollar. That's a weekly chart. Let's switch over and take a look at a daily time frame. Let me see if there's some kind of pattern here on the daily time frame worth noting. On the daily time frame, you've got a little consolidation that you can see that it's been traveling in. So the bottom of its consolidation, in essence, is where it's headed to right now. That's right around the lows of 134.70 out here. If it breaks that area, you've also got an A to B equals CD to the downside that it could form. That A to B equals CD pattern, that would take price down or project a price move down to the 1-to-1 takes you to about the 132 level, but I would say more likely it would complete that because the retracement here is pretty small. So I think you're more looking like the 129-ish range, 130-ish range, and that would be on the euro U.S. dollar. Now it's got some different channel lines, just simply because we're using the body of the candle. So a body of a candle is going to be different on a daily chart than it is on a weekly chart out here. So right now what we know about the euro, it's trying to find its footing and its support right down around 1.347 or so. Let's see what other currency pairs we've got. Let's go take a look at the pound and the yen. We looked at the euro-yen cross pair, but we can look at the U.S. dollar Japanese yen, see what it is doing. It's got a little 0.786 Gartley buy pattern. This has not failed here yet. If this does fail because it's worked, that would say you've got a butterfly pattern that would be in place, and maybe even a potential A to B equals CD to the downside. The buy inside the U.S. dollar Japanese yen, the longer-term buy, this is a pattern that's been drawn for a long time. That's the nice thing about these Gartley buy and sell patterns. You can draw them in ahead of time and then just simply wait like a patient hunter out there. $99 and around 82 cents would be the area to be looking at as a potential 0.618 larger Gartley buy pattern inside of the U.S. dollar Japanese yen. If we take a look at the Great British Pound, U.S. dollar, on its daily chart out here, having come close to completing the 1-to-1 A to B equals CD to the upside. A true completion would take it up to the 1.722 level. I do not see anything here that is bearish. I just see a pattern here of the moving sideways and working up an overbought condition inside the Great British Pound U.S. dollar. Let's take a look at some market profiles. We took a look just briefly at gold. Let's go look at gold and light sweet crude out here. Let's do that and take a look at some support and resistance level. If we take a look at Goldilocks out here, gold right now, in order to get back into some potential bullish mode, needs to close above 1311. Right now you're trading at 1304 and a bit of change out there. That 1311 happens to be the market profile low. My projection is more likely we're going to see a move lower inside gold, but that comes to fruition if, in fact, the lows from June 19th are taken out, and that's at 1276.20. If we look here at light sweet crude, it's trading right around the 102.16 range. Let's see if we can get their market profiles. We've seen a little bit of a bounce out here. Looks like it may want to bounce a bit further, and that further taking it into, let's see if I've got on the shorter-term time frame. Let me look at the 120-minute time frame out here. It's made a price relative strength divergent low. This was back on July 15th, a couple trading sessions ago, right around the 2 o'clock in the afternoon time frame out here. Excuse me, no A to B equals CD patterns to look at. Let's go back and take a look at the daily chart. Take a look at the new market profile that has established itself. It says that this could travel up into the 104.20-ish range. That would be a pretty decent bounce. But retracement-wise, if we take a look at that, that's a retracement off of its recent high. That's from June 25th. down to the low a couple of days ago out here at the $99 level. You can see it's only made a 0.382 retracement thus far. Dead cat bounce 102.32 is the number. You're trading right around 102.15 or so. A logical move would be a 0.618 retracement before it continues, and that would be potentially setting up an A to B equals CD to the downside. That would be the C point right around 104.37, the 0.618 retracement inside of light sweet crude. Let's take a look at things that are moving and grooving out here. Let's take a look at some things moving to the, well, we looked primarily at what's moving to the upside, but we didn't look at Snap-on Tools. SNA is the ticker symbol. That is gapped up here. They're out with numbers. They generated $826 million in net sales versus $761. So nice job there. Earnings up as well, $106 million versus $88. So looks like folks are filling up their tool cabinet out here. Boy, this is all-time highs. So many of these equities here that have gapped up at all-time highs out here. Very interesting, as Colonel Klink used to say. And, of course, I don't know who coined the phrase. For me, it really came from the Pink Panther, from Peter Sellers, back in the day during those movies out there when he said, when you least expect it, expect it. And oftentimes that's really the way that our market works out here. If we take a look at Snap-on Tools, up with some nice volume here this morning, 372,000 shares out here. Let's see if we put a weekly chart on the screen, see if we can see any patterns, get an idea for where this may be headed to. We don't. I think it is as Ralph Cramden. No, was it Ralph? Yeah. I think Ralph said to the moon and back. I don't know if this is going to come back, but it is headed to the moon out here, and it looks like I don't see anything that is really in the way. If this thing ever did pull back, the buy on Snap-on Tools, if it can pull back in light volume, is the week ended February 3rd out there, 3 million shares the upside. The price spread on that is the high, 108.79 to the low of $96.24. But otherwise, I don't see any signs of any negativity inside of Snap-on Tools out there. Of course, I don't know, does Snap-on Tools actually sell? Yeah, they must sell tools. I see their trucks driving around every now and again. Let's see what we've got here moving to the downside. SanDisk out here, as we mentioned earlier, that's to the downside with volume. Now down 11%, trading out at 95.50. SanDisk is very likely going to make a move. Danger, 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 Will Robinson. This is going to make a move out here down into the breakout session from April 17th, 12 million shares. Down there, that is where she or he is headed to. AutoNation, AN is a ticker symbol, down 6% this morning. Also looks like this is moving down with volume. It just moved back down into a breakout session. So this had a nice little breakaway gap. That was on the trading session of June 20th out here. It moved topside with 3 million shares. Went ahead and confirmed an A to B equals C to the upside. Looks like it completed that pattern. Your A point on this was down here around April 28th low. The B point was the trading session from June 3rd. Makes a retracement down into June 13th. It took out that B point with wide price spread, accelerated volume. Gave you a one-to-one move out there of $60.81. It completed that pattern, and now it is gapped down this morning with volume. So let's take a look at this. Came back to a breakout area, which is what you like to see it do. You just don't like to see you do it with volume. Again, that volume was 3 million shares, and today it has done 1.2 million shares as we speak, and we've only been trading for an hour and 18 minutes out here, so not a good scene for AutoNation on its daily chart. That's what's called volume off of highs out here. So we'll just have to monitor if volume continues to pick up, or if you've got the funds out here now buying back in because they see this as a buying opportunity with it coming back to this breakout area. And I don't know which one it is here just yet. If it didn't have that wide price spread accelerated volume session from June 20th, it would be much, much easier to make a call on the stock out here. If this area fails, let's look at a trend out here. Let's add a trend line to the position and see if it has broken a trend. Now, this is a short-term trend. This is coming off of the January 29th, 2009 low out here. And how about that? It's trading right into the trend. How about that, folks? Oops, I didn't mean to do that one. Okay. When we come back, we'll go take a look at AutoNation. I'll show you a little trend line that right now the body of the candle is trading into. 877-927-6648. We've got the Dow is up 34 cents. S&P back $2. Be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
welcome back, folks. Dow's up $2. We got a flat market in the Dow, S&P, and NASDAQ Composite, which is off 5 points. We could do some barefoot water skiing and, living with passion. That's really what it's all about. I hope that each of you do that each and every day. New York Stock Exchange down 21 points. Still has net declining issues as we speak right now. 424 to the downside. It would need 1,983 net advancing issues in order for the New York Stock Exchange to switch from bearish mode to bullish mode. So the NYSE, the wider swath of the market's been in control of the bears for really for over a week now out here. Let's go see what kind of price damage they've been able to inflict upon the market. I don't believe it is too much out here, and that's so that just tells you how strong the market actually is, really. If you think about it, the bears, I think they got control here July 7th or maybe July 8th. That's of the New York Stock Exchange. And in doing so, we haven't seen we haven't seen a breaking of a swing point. The swing point that we'd be focused on is July the 10th, and that's at a price low of 10,880. It would need to clear to the downside. But we're having a little discussion here in the Tigers Den. I don't recall. For me, I remember it being Peter Sellers that was used. I think a lot of people used it when you least expected out there. Of course, I'm being told as well that came from Rowan and Martin's Laugh-In. Of course, that was good. And I think it was Artie Johnson that used to be the guy that said that out there. Well, look, whoever it was that said it, we take a look at the marketplace out there. At this stage here, I'm just simply going to have to go with the fact that the Euro-Japanese yen is saying when you least expect it, expect it. Because that's showing it's breaking its lows. That's showing a directional difference between the market, whether it be the NASDAQ at this stage or the ES Mini out here. You got the GE correlation chart. That's always resolved itself in the direction of GE. It's making lower highs out there. So unless that changes inside of GE, it's saying when you least expect it, expect it. The VIX index, though, right now it's saying, hey, don't expect anything at the moment. But it's up off of its session lows. It's trading at 1141. If it does close today above the price point of what looks like right now 1198, another 50 cents higher out there, well, that might be sending us a message of expect it. Because once the VIX trades above the 50-day exponential moving average, that's where things take place. Earlier we were taking a look at that 3-drive to a potential, 3-drive to a bottom. It wasn't potential, it was a 3-drive to a bottom pattern inside of the FTSE. Look, they don't have to happen at all-time lows, or 3 drives to a top don't have to happen at all-time highs. Just so happens, though, inside of the Dow's chart out here, it has formed a 3-drive to a top pattern out here. Time-wise, let me see here. Let me do the cycle study on time-wise. If drive 1 was June 20th and drive 2 was July 3rd, it says July 17th should be drive 3. What's today? July 17th. How do you like that? So it does a 1.2. I should redraw this in. I don't know if that's going to be today's lows, but there's your third drive from a time frame standpoint. If this is going to work out here, you've got time. Yeah, the 1.272 expansion of a set of swing points out there, and you got the perfect timing. So what you would need here, let's say today just simply stays as it is, no kind of reversal or something in the marketplace. It'd be very easy to reverse today's action tomorrow as far as a bearish signal out there, and that's really what any kind of pattern needs out there. It needs some kind of confirmation and signal. So you do have a 3-drive to a top inside of the Dow, but just because it's forming doesn't mean it's really a valid pattern out there. Hey, folks, stay tuned. Our man Basil Chapman is up next. It is Terrific Thursday. That means we've got Daryl Martin, David White, Andy Heck, and the Tom O'Brien Show from 4 to 6. Have a terrific Thursday. Look forward to seeing you soon. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion.
While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.